Let AI take care of the job of earning money.
Hi everyone. Let's talk about how to optimize an AI trading strategy. This time, we'll use the candlestick-based moving average strategy we designed in the last video. If you haven't seen it yet, I recommend watching that first and trying it out yourself. Otherwise, you might just waste your time here. In the last video, we set up a strategy using a 20-period moving average, and the logic was straightforward. The price has to fully cross above the EMA. The EMA must have turned upward on the previous candle, but the SMA should still be trending downward for at least 5 candles. The entry candlestick needs to be bullish. The entry candlestick's volume must exceed the previous one. The upper wick of the candlestick cannot exceed twice the size of its body. Take profit and stop loss are both set at 0.32%. Since the backtesting time is different from last time, the data will also be different. For example, the win rate was 61.54% before, but now it's 57.65%. So, we'll base everything on the new data for optimization. When optimizing strategies, always use the latest data as your standard. If you check out the script, you'll notice that ChatGPT generated code is user-friendly, with clear comments. For example, in the parameter section, you can see where the EMA and SMA lengths are defined. Even if you don't know how to code, you can probably guess that's where you adjust the moving averages. So, the first thing to optimize is the length of the moving averages. If you try changing it to 30 or 16, you might notice that the win rate or profitability isn't as good as when it's set to 20. Of course, you can test other numbers, like 24, 36, or 12. Every time you change a number and hit save, TradingView automatically reruns the backtest. The results will tell you whether it's worth changing the basic parameters. In this case, the parameters are just the 20-period moving average and the 0.32% take profit and stop loss levels. When you have more parameters, in the future, the process is the same, adjust each one and find the best combination. Once you've optimized the basic parameters, you can move on to see if the entry and exit conditions can be improved. In the script, you'll find a line labeled Long Entry Conditions. Even if you don't understand coding, it's pretty obvious that's where the long entry logic is written. If you're not confident in guessing, don't worry, ChatGPT's AI is your best friend. You can copy the entire script, paste it into ChatGPT, and ask what the long entry conditions are. ChatGPT will explain each condition and even tell you what they mean. After figuring out where everything is, the next question is, what can we optimize? As mentioned in the last video, all strategies come from observation. So, take a look at the candlestick chart for this strategy and study the variables that might affect the results. From the chart, we can see that the key variables are the two moving averages and the candlesticks themselves. For candlesticks, we can look at the highs, lows, and the body-to-wick ratio. If we want to figure out which variables impact price movement, these are the areas to explore. For the two moving averages, we've already tried adjusting their lengths. Now, let's look at their relationship. For example, does it matter if the EMA is above or below the SMA on the signal candlestick? Does the distance between the two averages make a difference? How about their relative positions before the signal? These are all things you can test as additional entry conditions. Even the original design, like requiring the SMA to decline for 5 candles, can be tweaked. What happens if you change it to 4 or 3 candles? Remember, only test one variable at a time. If you change 2 things at once, you won't know which one affected the results. Let's say you want to test reducing the SMA condition from 5 candles to 4. Since you know where that logic is in the code, you can either modify it yourself or ask ChatGPT how to do it. Here's a tip: if ChatGPT made a mistake in the original script, it might repeat that mistake when making adjustments. That's because each query is treated as a new problem. To avoid this, don't paste the entire script, just the part you want to change. Once you've made the change, rerun the backtest. You'll notice the entry frequency, win rate, and net profit might all change. Remember, you need to look at multiple metrics, not just one. For example, after this change, the win rate dropped, but the net profit and entry frequency increased. Think about your goal. Do you want to build your reputation, or do you want to make money? For me, it's about making money. So, if the win rate doesn't drop too much and net profit grows by 7.3%, I'd consider this a good optimization and keep it. Then, I'd move on to test other variables. After several tests, I ended up with 2 optimized conditions. Changing the SMA condition to 4 declining candles. Adding a condition where the EMA 4 candles ago is less than the SMA 7 candles ago. Once we're done with the moving averages, we can focus on the candlesticks. Look at how individual candlesticks behave and the unique characteristics of the trading asset. For instance, Bitcoin contracts are fast-moving but relatively niche compared to Forex. This means lower overall volume, which makes it harder for sustained trends to form. After a big volume spike, it's unlikely to maintain that level. Without volume, price volatility decreases. In general, if a candlestick has a small body, it means the price has reached consensus during that period, so short-term volatility is unlikely. If you apply this idea, you can avoid entering stagnant markets. When testing, focus on the characteristics of losing trades, especially those that immediately reverse and hit the stop loss. In TradingView, you can check the max profit before loss metric for losing trades. If it's very low or zero, it indicates a false signal. Click on the trade in TradingView to see the corresponding candlestick. Remember, the signal comes from the candle before the entry candle. From experience, the signal candle and the 2 candles before it often influence what happens next. For instance, if losing trades often have small-bodied candles in the 2 prior candles, you can test whether that impacts win rate or net profit. Run-up is actually a great metric to tweak your take-profit and stop-loss settings. If you notice a lot of losing trades that almost hit the take-profit before reversing, you can test setting a slightly closer take-profit level. Now, let me share some practical tips we've gained from years of optimizing strategies. For example, when refining a 5-minute candlestick strategy, I skip entry signals if the price has already reached a recent high or low. Like when the last 4 candlesticks hit the highest price in the past 4 hours. Or if the last 60 candlesticks hit the highest price over the past couple of days. These signals usually don't work for me, but how recent or short-term should be defined? That's where studying losing trades comes in. I also avoid entry signals if the signal candlestick's volume is either way too high or too low. The last 3 candlesticks have bodies that are either too small or too long. With all that in mind, here's what we settled on for the final entry conditions for this moving average strategy. Moving averages. Both EMAs and SMAs are 20 period. The price has to fully cross above the EMA. The EMA must already be rising on the previous candlestick, but the SMA should still be declining for the past 4 candlesticks. The EMA from 4 candles ago must be lower than the SMA from 7 candles ago. Volume. The signal candlestick's volume must be at least 1.175 times the volume of the previous candlestick. The signal candlestick's volume must exceed 15% of the highest volume in the last 8 candlesticks. Candlestick characteristics. The signal candlestick must be bullish. It must increase by at least 0.0475%. The 2 candlesticks before the signal must have bodies larger than 7.5% of their total height. You're probably wondering, how did we land on these exact numbers? It's simple, test them one by one. For example, when evaluating whether the candlestick shows price consensus, I tested how thick the body needs to be. I started with a 0.05% difference between the close and open price because my take profit and stop loss are set at plus or minus 0.64%. On average, trades end within 12 candlesticks, so dividing 0.64% by 12 gives 0.05%. Then, I tested incremental adjustments of plus or minus 0.0025% to see what worked best. This isn't some mathematically proven method, it's purely based on experience. In the future, if you find more reliable or scientific methods, use those instead. Finally, I plugged all these optimized conditions into the original strategy. When backtesting the last 2 months, the win rate, entry frequency, and net profit all improved compared to the original. Even after extending the backtest to 2 years, the win rate stayed at 58%. The profit graph over 2 years showed steady growth, so we've started using this strategy with real money and added it to our commercial copy trading lineup. Now, some of you might ask, why only backtest 2 years? Well, experience tells us that long-term reliability for strategies is rare. A strategy that's great in the short term often beats one with average long-term performance. For example, a 5 to 8 year backtest might show an 80% win rate, but if the last 6 months drop to 40%, would you still use it? I'd rather take a strategy with a 40% win rate over 5 years but an 80% win rate in the last 6 months. The most important data to analyze is from the last 6 months to a year, as it reflects how well the strategy fits the current market. After all, your money is being bet on today's market, not the past. That's it for this explanation on strategy optimization. This video turned out pretty long, but if you found it helpful or well made, please like, subscribe, and share it with your friends. And, as always, feel free to drop any questions or thoughts in the comments below.